Hello guys, it's Lynette Zang, CEO and founder of Zang Enterprises, and today is an incredibly important live event. So I'm really glad that you're here. I really appreciate it. Why don't you hit that like button on the way in, leave us a comment because we need this video, and share, because we need this video to go out to as many people as possible. Now, you know I've been talking about the yield curve inversion, which means that the shorter term yields are higher than the longer term yields. And you also know that this has been the longest yield curve inversion ever, which means that the subsequent crisis is also going to be the biggest one that we've certainly experienced in our lifetime, because this is the very end of this currency's life cycle. But let me walk you through what's going on, because finally, after a couple of years, the US curve disinverts as soft labor data fuels Fed cut bets. So what that all means, all that gobbledygook, is that with the Feds, with everybody, with the markets anticipating that the Feds are going to lower the rates, the markets are doing part of the work for them, and those shorter term rates have fallen below the longer term rates, and therefore the yield curve has disinverted. Why does that even matter? Well, let's look at this Fred chart, and I encourage everybody to go in, follow the links, and especially the Fred. You can put anything in the search bar. It's going to blow you away what you find. But this is the 10-year minus the 2-year spread. So this is the inversion that we've been talking about for a long time now. Now, these gray bars are official recessions, because after all, even though you and I might be in a recession right now, it's not a recession. What are you talking about? Yeah, it has to be official. Well, I think we've been in a recession for a while. They just don't want us to know. But let me just show you. Because as the yield curve dropped into inversion, every time before it hit the gray bar, it has gone up. So that means that the yield curve has now disinverted. That longest inversion in history is now over, and I'm getting goosebumps because that starts the clock ticking. Once the yield curve goes positive, it tends to start the clock on the recession. So if anybody's been procrastinating, and if anybody has been just waiting because you think that you're going to be able to get in place before all of this happens, I hope you take heed of this warning, because this should tell you to click that link below. If you do not have your strategy in place and executed, click that link, go in and talk to one of our strategy specialists and get it done ASAP. This is a very, 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 very big deal. So they're using all of these excuses, and right, there's only one way to fight the inflation, and that's with deflation. U.S. job openings declined to the lowest level since January of 2021. Well, why would that matter, January of 2021? Oh, how about we were still reeling from what happened in 2020 with the cerveza disease? So they're likening it back to that crisis. That's what makes it significant. But vacancies, that means job openings, fell to below all estimates, going all the way back to that January of 2021, at the same time that layoffs rose to the highest level since, March of 2023. But what is really more important about this is look at that trend, right? Now remember, what did I tell you? And it's so easy to think about this. How do you know you're in a negative trend? You will see lower and lower highs, which is what you see right here, lower and lower highs. So that means that the job opening, technically, because it works for everything, it really does, is more than likely there's going to be a whole lot fewer jobs available. At the same time that the level of layoffs, how do you know you're in a positive trend? higher and higher lows. I cannot give you a whole lot of guarantees in this business because all of this stuff is way beyond my control. But I can guarantee you this. If you keep getting higher and higher lows, ultimately you'll get higher highs. And if you keep getting lower and lower highs, ultimately you'll get lower lows. So what I'm trying to show you here is the job trend that puts everything in jeopardy because this is a consumer-driven economy. And so if there are fewer people working, and we know that the pace of pay increase has slowed down significantly. We've talked about that. And we know that the debt levels are at nosebleed levels and that bankruptcies and write-offs are growing. What do you think that does? With the stock market at extremely lofty levels and priced to perfection. Companies, Janet Yellen, what can I say? I think she's deaf. She is not listening to the public. She has no idea of the reality of what's going on out there. But what she says is companies are a little less eager to hire now. Oh my goodness. But she added that there is still very strong pace of job creation, a pace that's certainly sufficient to absorb all the new entrants into the labor market to keep this economy growing and keep your ability to grow more debt, even though clearly you can't do it. Now, I mean, with all of the charge-offs, yeah, and the delinquencies rising, what is that really telling you, oh Janet? But of course, she cannot come on and tell you the truth because her job is to lie to you and keep you in the system and lull you into this false sense of security so that you think everything is fine and you continue to hold all of your wealth in fiat money assets that they can inflate away to zero because that's where we're headed. I mean, it's happened every time. And I don't think she bothers to read anything. But again, she knows this more than I do. She just can't tell you the truth. Because, hey, fewer opportunities projected for new grads in 2024. You can see what that looks like. But here's the bottom line. The period of unprecedented job security for American workers is coming to a close. It is so critically important for us all to take our power back because these guys that are in power, whether it's the government or the central banks, they don't really care about you or me. This is the importance of our community, locally as well as globally. Now, one thing that still gives me a lot of heart and a lot of confidence is that we are still seeing people come together and make a difference. So I know that we can do that. But as far as the workers are concerned, I'm not so sure that that is true because as we saw, I'm just going to go back here real briefly, but as we saw, U.S. job openings are dropping and the layoffs are growing. So you have to wonder how easy it's going to be to find a job. And all of a sudden, traders suddenly converge on economic hazards ahead. Well, they want the Fed to drop the rates, making it easier and cheaper to borrow and spend. That's how you create the inflation. Even though all that money, gosh, I don't know what causes inflation. I mean, not to the central banks. But again, their job is to lie. Because they sit there with their finger on the money printing button and they say, well, things are tight out there because we've raised the rates. But there's so much money that's sloshing around in the system so that what you're really seeing is these overinflated fiat money assets that have been turned into trading vehicles. This is a trading market. And JP Morgan shows a model, this model of recession probabilities, and they are diverging across asset classes. Okay, let me explain this to you. All right. So we've been trained. It is not true, but we have been trained that diversification is in stocks or bonds. So if bonds go down, stocks go up, and there you are diversified, and vice versa. But the problem is that all of this money printing has convoluted these markets so that what do we see now? We see stocks and bonds go up at the same time and we see them drop at the same time. So what you used to be able to use as an indicator of what was going on and to properly diversify your portfolio from losses, it doesn't exist. But the real reason why it doesn't exist is not because those are going up and down against each other like we would think or like we've been trained to think. It's because we're at the end of this currency's life cycle, and the only thing the central banks have is to print more money and drop rates. That's it. That's it. Now, look, I'm not saying that they can't come up with something that I'm not thinking of or somebody else isn't thinking of, but they, in my opinion, and I could be wrong, I don't think I am, but I could be, I think they've used up all of that, those experiments. So the only thing they have left is to hyperinflate the currency away. So let's go back to this conversion, because this is pretty significant when we are seeing indicator after indicator after indicator of a brewing crisis. A cluster of divergence not seen since 2019. What was happening in 2019? Oh, the money markets froze. Do you remember that? That was September. You didn't even know it because they covered it up with all of this money printing, and then conveniently the cerveza disease popped up its head, right? All they've been doing is postponing this crisis because they weren't ready yet. Are they ready now? I can't really tell you. I don't really know the answer to that. But the environment has only deteriorated. Yeah, they didn't fix any of the problems that created the crisis in 2008. They've tripled down on them. Because when you know you're going bankrupt, what difference does it make if you grow more debt? What difference does it make? But when you consider both the economic data and the subsequent earnings reports, so if the consumer can no longer consume and these stocks are priced at nosebleed levels, they are priced beyond perfection, what have you got? You've got a brewing crisis, because all of this is happening as I showed you last week, into an extraordinarily fragile market. This is like a house of cards. What one little whiff is going to push it all over? I don't know. We'll see what the Fed pivot does, but quite honestly, it's too little and it's too late. And I wanted to just remind you of these very fragile markets, because things have turned into day trading. These are not investor markets. Now, what they want you to believe, because I'm listening to the talking heads on Bloomberg this morning, and they're saying, well, if you're a long-term investor, that shouldn't matter. Well, it does matter, because once you lose your wealth, unless you protect your principal, how do you get diversified? Tangible assets, sound money. Because you need to be around to recoup any losses that you might have to take in any of the wealth that you hold in these fiat money markets. It really is simple. This is true diversification, because gold is the only financial asset, not one or two or three or five or whatever, the only financial asset that runs no counterparty risk. All that fiat money stuff, that's all counterparty risk. And what do? They just tweak the rules a little bit, and we've got Basel III coming up, the end game, and what did the Fed do? Boom! Slashed the amount in half, or more actually. I'll be talking about that more after peak prosperity. But they pulled back on their requirements that the banks need to hold to continue to loan. And we all know what happened in the stress tests. They were all crappy, but everybody passed. Good. Do you feel safe? You shouldn't feel safe. I hope you don't feel safe, because that is just about you getting robbed. We would characterize the extreme market ups and downs over the past couple of weeks as the latest illustration of how markets have become inherently more fragile in the past 15 years. Because it's all about keeping the banks and corporations profitable. It is not about your retirement or your ability to educate your children or your ability to sustain a standard of living. And maybe even, I don't know, have something to pass down to your heirs? Oh, no. It is about the bank's profitability. It is about the corporation's profitability. You and I, we are just about the right size to fail. So, in the first quarter of 2024, banks generated 48.9% of consolidated holding company trading revenue. That is an increase from 36.1% in the previous quarter. So you need to understand that the old model of how the banks made their money, which was by taking in your deposits and paying you this rate, loaning out those deposits at a higher rate. No. It is a trading market, and once the banks were freed from separation between deposit-taking banks and risk-taking banks, game on. And then it's anybody's market that's up in those upper echelons, the chosen ones to succeed. And what I'm trying to show you, and what I really hope you can see, is the risk that you are in. Do you get that? Do you see how they are playing with your life and your livelihood and your freedom and your children's future? That's not okay with me. That's why I do this, because it is totally not okay with me. And it's not just happening here. It is happening all around the world. This is a global currency life cycle issue. People ask me all the time, well, where can I go? Is it any safer over here than it is? No, because every single currency has to reset because the debt is not payable. They say, well, it's not sustainable. It hasn't been sustainable in years. It hasn't been sustainable. It is simply not payable. So in order to go into the new system, we have to burn off all the garbage of the past. And so what are the central banks doing knowing that full well? Central bank gold demand picked up in July. So this just recently came out, gold.org. You can follow this. But now wait a minute. Even going into this, they bought more gold than they ever have in history. I'm talking about central banks. Who knows more about what they are doing to the purchasing power value of the currency than central bankers do? You need to follow their lead and become your own central bank. The reported net purchases by central banks more than doubled to 37 tons in July. They're buying gold hand over fist at the highest levels ever. Are you? I mean, it's so interesting because, and they knew this when they set up the system, that is genius, that people marry the legal money of the state. But we all know that by design, inflation is baked into it. All they want to do is control the rate and speed of inflation so that you don't make different choices. That's price stability. Not does the gallon of milk stay the same. If you don't ask for higher wages, that's their price stability. That's what they want. But when inflation is higher and more rapid and more noticeable, then confidence declines. And this is a con game. and we're near the lowest levels of confidence in history. And this is a trend that's been going on for a while. The time to get in position is right now. It is right now. It is not tomorrow. It is today. When should you have started preparing? A long time ago. When's the next best time for you to get prepared? Today, not tomorrow. Today. So click that link. Meet with one of our strategy specialists. Get your own sound money strategy in place. Become your own central bank. It's that simple. And help us create a global, quiet, peaceful revolution just by converting this garbage. Oops. Love the way that sounds. Into sound money. It's so simple. And if you cannot do that, because I want you to remember that gold and silver in any form is monetary at its base. So go through and see if you have some of Aunt Bessie's sterling silver, a silver picture frame, whatever. Your old high school ring, it's 10 karat gold. Gold is recoverable. Protect yourself. It is so critical that you do this. But also I want you to know that even though we're not quite ready to bring out the mantra and that whole other website, it's coming. We're working on it. But you still have access to all of our experts here at Zang Enterprise Community. So if you need to talk to Morgan or you need to talk to Jason or you have questions about water or food or energy or planting or whatever it is, call us. We'll connect you. You can still have access to it because it is so critical, especially with this disinversion. That means the clock is ticking. Get in while you can. We keep getting warning after warning after warning. Which one will you take heed of? Which one? I hope, if you haven't up to this point, that this is the one. Because every finger is pointing in the same direction. And that's to a major, not just a recession, a hyperinflationary depression. So now I'll take questions. Oh, yeah, thank you. Okay, so next Tuesday, I will not be going live because I will be, at the peak prosperity, and then I have a few other things I have to do before I come back here. So we will be doing a premiere, right?
Correct.
And Adam will be in the comments taking down any questions for my return. And then I will answer them all on the following live. Okie doke. So now I will take questions.
Do you mind if I make something real quick too?
No, go ahead.
Okay, so real quickly, Wasted White Boy, I really appreciate you commenting me and telling me. I don't see it here in the comments. I'm looking at it. I see you said you just posted again and you've emailed it. So now I'll reach out to one of our assistants and see if I can find the email. He's been asking questions on the stream and it's not showing up here. And I don't know if it's, I don't know. I haven't added any blocks or anything like that. So it's not like, we're intentionally missing your question. I'm sorry about that. I just want to make sure that I'm addressing that. Wasted White Boy. I'm going to try to reach out to someone right now and see if I can find the email for you. But right now, I'll have Lynette start with the questions with Nancy Schultz. She was the first one that I saw. So I don't even see your first comment. I'm sorry about that.
That's okay.
Just wanted to make sure I addressed that real quickly.
Yeah, can we? Well, we can try and figure it out. I mean, I wonder if there's a filter that's blocking it on his end because we don't have it on ours.
I don't have any filters on there. Right. I have unfiltered comments. So, yeah.
Okay.
We'll figure it out. Sorry about that.
We'll figure it out because it's important. Okay, so Nancy Schultz asks, living here in the United States, if you had a dozen gold Cougarans, would you trade them for 1 ounce American gold Eagles? Sorry for the broken up sections for the question. So maybe you asked him to and you put it together.
I put it together, yeah.
Okay, good job, Adam. Whether you've got Cougarans or you've got American Eagles, those are all bullion, which you guys know I have one piece of bullion here. So I would, you do whatever you're comfortable with, but this is what I converted mine into. Because I did used to have an IRA. It was a SEP IRA. all of it, all of my retirement plan is in this because I like it. Look, they've been stealing from you since the day you were born. So all of those people that say, oh, they wouldn't do it again, well, then they don't know historic precedents here in the U.S. Because I'm pretty sure if they've been stealing from you your whole life, at the very end when they're going to get your last little bit of money, if you try and hold bullion gold, it's just hard for me to go, you can keep that. Yeah, we've taken all your purchasing power and made you have to work a whole lot longer for the same fiat money, which we can just devalue easily and at will and have wealth transfer to other people. So you do whatever you want, but I think that the only difference between a Cougarin, which has a slightly lower gold content weight than the Eagle, the new American Eagle, is the Eagle in the U.S. is more recognized, and so it'll command a teeny bit of premium. But I personally, more than just like this ounce that you see, I don't own it because I want to make sure that it doesn't matter whether I'm right or wrong. But you've got to do what you're comfortable with doing anyway.
Can I just ask one clarifying thing real
Sure.
quickly? So kind of like my mindset, right, is try to find the gold, the highest amount of gold for the least amount of price.
Well, actually,
help me understand that. Yeah.
I will help you
Thank you.
understand that because also Adam happens to be really into anime. Okay.
Pokemon. Oh yeah, Pokemon guys.
So he gets that kind of mentality, which is a good thing. But let me ask you something. If you had a choice between a common Pokemon card that you get every time you open up the packets, is my understanding, or one that's very rare, or why do you buy all of those packets because you might get that one that's very rare?
Correct.
Okay. Which one holds its value? Which one has more value?
It's all the old cards. It's all the classic cards that were from the first edition set. It's none of the modern cards, none of the new stuff.
Right.
It doesn't hold any of its value because they have so much of it. They can print it. Pokemon opened up 8 new printing facilities 2 years ago, which flooded the market of cards and changed my portfolio value, if you will, because those cards that were rare at one time were now flooded the market, and there was so many of them.
Well, so you can take that same exact kind of mentality because they can mint. I mean, there is, but I want to be clear on this. Unlike Pokemon cards, there is a very limited supply of gold. But there's a whole lot more of these out here than there are of this. This is very, very rare. However, you can also go with the raw ones. It depends on what you're trying to accomplish. You don't want a coin where there's just 2 if you're trying to use that for your property taxes. So that's why I say there's gold and then there's gold. There's silver and then there's silver. What you need to do first is define what you're trying to accomplish, and then you allow that guide you in your selections. So I don't think we're worried about the government coming in and confiscating Pokemon cards, right?
Right, yeah, not anytime soon anyways.
Okay, and you have to do that inside of a small community. So community, I don't care what you're doing, community is extraordinarily important. But I want to take on what you say for a minute, right?
Yeah.
Which is the lowest price for the best coin, right?
Exactly, right.
So when we're making our selections in those different categories, that's exactly what we're looking for. We've got a category, say rudimentary growth. And what our strategy specialists are going to do is look at everything that's available, and they're going to choose in that category the coin that has the lowest population and the highest grade for that cheapest price. Does that make sense?
Absolutely.
Okay.
Yeah, absolutely. Totally does. Mm-hmm.
Right.
Yep.
So as far as your bullion is concerned,
right,
that is not for me.
Okay.
Because I know that, I don't want to live on hopium. And I hope that they don't confiscate, because if it's a random opinion, that's all it is, and history does not support that. And you guys know I do have raw gold. They're pre-33, but that's my emergency money, right? So that's kind of what you're talking about.
Right.
But
right.
going up the food chain, after you make that definition, that's what we're looking for. We're looking for the least expensive and best quality and lowest population coin
Right.
in each one of those categories.
Got it. That makes sense. Yeah, that makes a lot of sense. Thank you for clarifying that for me.
Yeah.
And real quickly, I got asked a question from Boone22. Adam, what's the value of the first run of gold cards worth? You know, very similar to gold. Okay, the raw cards aren't worth as nearly as much, but when you grade them, you send them in to a company that looks at them and it values how long, you know, if the oxidations happen to the card, are the corners, how is the printing, how does is there any glitches or any problems with the card, and that will determine the value of the card, really, the collectible cards. Like I said earlier, anyone can grade any of the new stuff because it's so many of them printed, but the old ones that were made in the early 2000s, the end of 1990s, those they don't print those anymore. So when you send those to get graded, they usually retain 10 times the value. Let's say it's $500. You know, might have a $5,000 card. I think Logan Paul, another YouTuber, was walking around with a $1 million card on his neck. Yeah.
On
so
his neck?
on his neck, he was.
So it's slabbed.
It's
like
slabbed.
the heart.
Correct. And then he put a chain on it, and yeah. So that kind of. I hope that answers it for you,
I have
Boone.
my
I mean,
gold coin
you know.
bracelet, right?
yeah, exactly. Yeah. So I mean, upward. Really, with the collectibles, and I'm sure it can act like this with gold. There really is no limit, and there is no value limit. It's the perceived value of whoever wants to collect it at the time. If there's only 3 copies of Shadowless Charizard with that rating, guess what? You can charge whatever you want. You know? Well,
Yes.
as long as someone will pay it, I should say. As long as someone will still pay it.
And that's
Right.
exactly where I was going, right?
Yep.
Because it is anything physical is a true supply and demand market. But I got news for you. There ain't no fever like gold fever.
Yeah.
And we are at the very beginning of that.
Absolutely. And yeah, Nancy, real quick, I did cut off the first part of your question. She said, thank you for what you do, Lynette. And she's so happy for being here. So I cut that off. Sorry,
I'm
Nancy.
so thankful that you guys are here. We need to build this live. And maybe when you're in Arizona, when we're ready to do this live show, and I'm talking about a lot because you don't know how badly I want to do this, maybe you'll come and be in the audience. Okay, Emmanuel B. says, hello from Romania. Hi. Oh, I've been to Romania once just for a minute, though. But thank you for the intel. I started stacking gold and silver in 2017, and so far, the best investment. Yep, absolutely. Do you recommend 60% gold and 40% silver? No, what I recommend is that you define what you're trying to accomplish, because they do different things, right? So if I need to go to the grocery store or put gas in my tank or barter with maybe somebody that's local that's growing something or producing something that I'm not, I want silver, right? And what I want is I want a variety of sizes. So if you were to come in and talk to, but anybody can do this. It just kind of depends, right? Now, then like we define, what do you need silver for? Which purchases do you need silver for? Which purchases are better done with gold? So food and gas, property taxes, all right? That is, I don't know if you can see that well, but that's a fractional gold coin. So we have all of this broken out in our strategy. So then when we look at your cost of living and where you spend your money, then we determine, okay, this is how much silver you need to sustain your standard of living. This is how much gold you need to sustain your standard of living. Both of those are in the barterable camp when we're looking to just sustain a standard of living. Like, when do you think you might publish the food one?
That'll be next week.
Next week?
Yep.
Okay. So I just did, we recorded it this morning, and you're going to see more clearly what I'm saying to you because I took a basket of food from 1913 to the most current BLS report, 2024. And I showed you how silver actually maintained your ability to buy that same basket of food, but gold went so far beyond that. So make sure that you watch that. So again, it is not a percentage thing. It is how you live your life. Because for me, silver is about barterability and the things that you can accomplish with metals, with the gold and the silver. Number one, you protect your purchasing power. So that's how you sustain your current standard of living. You can also protect with another kind of gold, maybe a higher population, lower MS quality level. You want to maintain your ability to pay off that mortgage. So pay off debts if you have fixed rate debts. Or you might want to educate your children and they're going to be going to school in 5 years or 10 years or whatever your future goals are. So you could take care of today, you could take care of tomorrow, and you can take care of many tomorrows to come. But you have to define that first and let that guide what you do. And again, I know you're in Romania, but I think everybody, everywhere in the world, there's going to be some nuances because you're not here and I'm more familiar with how to do this for the U.S. But quite honestly, I would think that the basic strategy would work for everybody. And, I really do. I mean, this is a global thing. And I feel like I'm becoming a global ambassador for sound money. Just keep watching. It keeps coming up to create some kind of strategy or some kind of packet that we can send to you in Romania, and then you can tweak it for your personal circumstances. We're not quite there yet, and honestly, we are all pedaling just as fast as we can because we are all here to be of service. But I imagine that at some point we will come out with that. And if you call us or you text us or you email us, we'll try and help you anyway, even though we're not doing business in Romania yet, but we will still help you determine that. So just let them know that I said that on the live, and they're gonna love me for that one. But we are all here to be of service, so Adam's cracking up. Why? Why are you laughing? Sometimes
Jacqueline, are you watching? Hi, Jacqueline.
Oh, yeah, Jack. Oh, that's why you're laughing. Oh, yeah. Jacqueline's probably going, don't say that. Hi, Jacqueline.
Hi, Jacqueline.
Anyway, good thing is, though, because I just gave her my acupuncture appointment since we're going to be traveling. And so
She'll
maybe
need it.
that kind of helps heal the wound because that'll calm her right down.
The great equalizer, yeah.
The great equalizer. Okay. CR says, Lynette, thank you for all you do. You are very welcome. Thank you for being here. Do you have an approved/recommended list of companies you trust to vault precious metals? Not sure it matters, but I am in the South. Thank you. There used to be one that I did trust in the South in Florida, but they're no longer there. The two that I know of here, yes, I trust them very much. The challenge is that you're not here. And while it's okay for your growth portfolio to not necessarily be where you can access it immediately, you definitely want your barterable portfolio there. So let me see if we can put together that list. It comes up, so let me see what we can do. Okay, well, I'll see what we can do. And Von Che asks, okay, what are your thoughts on high interest savings account? I'm having a conversation with my lady about that and was wanting my opinion. Well, my opinion is if they're paying high interest, that means that they are taking more risk, and it's still based on this. Now, having said that, there is a certain level of cash that you need outside of the system. So that is your first line of defense if you are like one of those Synapse clients that from May 11th to today, well, I haven't checked today, but at least until August 20th, had no access to their money. You better have diversified in your portfolio. You need to have cash outside of the system. And certainly if you get direct deposits or direct withdrawals, you're going to need a bank account that can accommodate that. Much more than that, you can always make a deposit. So I'll have a larger share of cash, but then I also have my emergency gold, right? So that's what I view my savings account. And if I needed it, I wouldn't really care so much about cashing it in. Now, you don't want to do it so that you're like real tight. And again, if you call us, that's something we can help you determine, but you've got to do whatever you're comfortable with. I think high interest savings accounts are, what can I say? You know, you got to do it, but you got to do it for a minimum amount, and then you diversify with that. So if you lose, I mean, the thing is, you know, the strategy is built in layers, right? So it's based upon whatever is happening, you having the ability to address it and having it not change your standard of living. So even think about diversifying in banks. Maybe you just keep a small amount here and a small amount there. But what if they close this one and that's all you have? You are so fill in the blank.
SOL.
Yeah, SOL. Okay, Gaffing Productions asks, question for Lynette. Was thinking about taking a zero cash advance on a credit card to buy treasuries for 10 months. I figure this gives me some liquidity. Can you tell me if this is a bad idea? Okay, let me think about this for just a second. There must be some reason why you only need to hold it for 10 months. So if you are just looking for a little pickup, I'm really not worried about whether or not the government is going to repay those treasuries, because they could just, I wish that happened to them, but they could just do more of this to pay them, to pay you what they owe you. That's actually why when I first became a stockbroker back in 1986, I cut my teeth on treasuries, because I figured if I'm wrong, they can still just print the money to pay you. So if it is a very short term thing and you know you want that money for some particular reason, then no, that is not a horrible idea, because the government's going to pay you back. How much that money will buy you when you get it back is probably going to be less than what that money will buy you today, but you do need that level of liquidity. So no, I don't think it's a horrible idea if you have something in mind for that money. Does that make sense? Yeah, you're over, Adam's over there going, Okay, and Kathy Piscitello says, is it true that BlackRock has gone bankrupt? No. Now, are they really bankrupt emotionally, intellectually, and in every other way like that? The answer would be yes. But BlackRock is definitely one of those that are too big to fail. And Jan Roberts asked, what is the price of gold and silver based upon? How is the value determined? I love that question. Thank you, Jan. That's a great question. These days, the price of gold and silver are a trading market, and a rising gold price is an indication of a failing currency. And since they can create as much gold and silver that does not nor ever will exist, it is very easy to change that price. They can sell a lot, which they do, sell tons and tons of gold and silver that do not exist. That pushes the price down. Then they can buy it at the lower level, and then that would push the price up. And so this is what I'm talking about when I say we are in a trading market. So right now, it is Wall Street traders that are determining, like JP Morgan and all those guys, that are determining the visible price, that spot price that you see for this and this. But the value is very different, because the most important function of gold is to hold its purchasing power over time. And it does that because there is a very limited supply. Just like we were talking about earlier, anything physical, there is a finite amount of it. But the reason why gold is the best diversifier, and silver as well, physical, in your possession, is the best diversifier and holds its value, is because it has the broadest base of function. Just like I'm talking about with you, what you want to determine, what you want to position into is what are you trying to accomplish, right? So the functionality of both gold and silver, they are used in every single sector of the global economy. That's why I say it has the broadest functionality. This stuff is used in one place, and it's for trading and it's for barter. But gold and silver is used in dental, it's used in food, it's used in the financial system, it's used in space, it's used in every single sector of the global economy. So not only does it have the broadest base of functionality, but it has the broadest base of demand. That's why it's never gone to zero. And they have not figured out how to duplicate the properties in either gold or silver in a lab, like they have lab-grown diamonds, because a lot of people, diamonds. Well, now they grow that in a lab, and it's a lot less expensive, and it pushes the price down. But they haven't been able to do that here. So instead, they just create fictional gold and silver. However, when all confidence is lost, this has happened 100% of the time. Zimbabwe's experimenting with it right now. When your confidence is gone, when the public confidence is gone, and we are in that hyperinflation, guess what they'll bring back? And they will reset this stuff. It's how they do it. They reset this stuff that has no intrinsic value against this stuff that's all intrinsic value. Boom. Those are those overnight resets that I show you. And in fact, I just did a little short so you can even, and remember too, whenever I show you that currency hedge, and I'll show you that currency against US dollars, then I'll show you that currency against spot silver, and spot silver always outperforms the US dollar against that currency, and then I show you spot gold. And that always outperforms the silver, and it always outperforms the US dollar because it's sound money. Silver and gold, physical, are sound money. And that's what they use to regain your confidence. So that's when you see the true value of both gold and silver, because it's a physical market. And at that point, it is supply and demand. And there's a finite amount of this and an unlimited amount of this. So it moves up in terms of that crap, but you want to use it to execute the strategy and come out on the other side, sustain your standard of living, and put yourself in a position, if you can, to expand that standard of living. It's all part of the strategy. And it's not rocket science. It's just based upon repetition of history. That's all. Easy. Unless Ranger asks, during the next real market meltdown, is the powers that be going to throw out the baby with the bathwater? For the uninformed, that means commodities. Look, in these paper markets, what always happens, because so much of this is done with debt on margin. So when the markets drop down, if you've borrowed to buy this stuff, you're going to get a margin call. In other words, you got to come up with more money to keep your account above a certain level of debt, right? So in that case, then you must sell whatever the market will buy. It may not be what you want to sell, but it will be what the market is willing to buy. And that's why you always see spot gold and spot silver, well, spot gold especially, drop when there is a market meltdown. But I don't remember if I used that in anything. I just gave it to the strategy specialist, though. The chart that I did back in 2000, and I can't remember, but it was from 2008, comparing spot gold, gold stocks, and the collectible coins. So you can see how each one of them behaved during the 2008 market meltdown. I don't think I've used that just recently, but if you want it, call us and we can send it to you, right? And because everybody's got access to it, so you can really see how that behaves. Well, they throw out the baby with the bathwater. It's not so much throwing that out, but you're talking about all the paper markets. In the physical only market, and that is only going up because there's a true flight to safety into the physical market. And this is a true supply and demand market. They can't magically create a whole bunch of more pre-33 coins. And Ashton Getta asks, hi Lynette, I asked you last week if I live in California, am I required to pay taxes on bullion dealers out of state who don't charge tax due to their laws on taxes regarding bullion? I believe that you did ask me that. I kind of remember it, but nobody gave me a list, and I had a little challenge this weekend. However, we do know we have to charge whatever taxes are applicable in the state that's taking delivery, right? So if I don't think California taxes bullion dealers, actually. I'm not really sure. I'm sorry. I will write it down here on my list. And if you share your email, I will email you that, since I'm not going to be here next week.
Ashton, if you want to send an email to questions@LynetteZang.com, and then just make sure you put your username in there, Ashton Getta. Otherwise, we won't be able to find you, right? Don't drop it in the chat. Don't drop your email in the chat. We will find you that way. So just email us at questions@LynetteZang.com if you can.
Yeah, but here's the other thing. You can call the office, and the strategy specialists also have that information. They have to have that information because they're working with people all over the country. And so we do have that. I know that at some point it's going to go up on our website. I'm not really sure that it's up there yet, but we do stay on top of that. It's just, I hate to say this, but I will look it up, but generally speaking, not my job, Mon, because I kind of focus on this. So I'm sorry, Ashton. Please forgive me. I am pedaling as fast as I can, I promise. And Steve Aspil asks, I keep hearing about the banks revaluing the price of gold. Can you expand on this? Just exactly how will they do it? Conclusion, which banks could do it?
Collusion.
Oh, collusion. Thank you. Yes, it is all collusion, but it's collusion with the central banks. How do they do that? They do that by creating lots of gold and silver that doesn't exist and then going into the markets and trading it, buying and selling it. It's really not that hard to do, and because it's been legalized. And it has nothing to do with the supply of gold or silver that underlies it. So that's how they do it. And yes, it is collusion, but the problem is it's collusion with the government and the central banks. So the government changes the laws and the rules to support the theft. So that's why understanding the fundamental value is that much more important, because how many times can you be lied to when you do not know the truth? And it is really easy to get, I mean, it's a little nuanced, but it's basically pretty easy because I'm giving you the formula. How do you know, regardless of what I say or what anybody says, the true value of an ounce of gold is? Because that's where it's going when they have to reset this system. 100%. That's happened over 4,800 times. It's happening right now. What am I saying? 4,800 times. In 1913, spot was $20.67, hence the $20 face value on the coin. Today in the US, the official price of gold is $42.22. So who sets the price, right? It's very easy to do that if you can hold or create gold and silver that does not exist. And yes, it is collusion because they just changed the rules. It's all about perception management, because if they can perceive how you move forward, then they're getting what they want, but you don't realize it. You don't realize that you're being completely manipulated, and we are. We all are, in one way or another, whether it's with our monetary system or our food system, or the choices that the banking system, the choices that we think we have. But with all of the consolidation that's been going on all over these years, you really have a concentration of power, whether it's your food, whether it's, pharmacies basically own all the seed companies and the food companies. So whether it's your health or it's your wealth, we are being lied to and manipulated. Don't believe them. Take your power back with both of those things. So growing your own food is not only about being prepared, but it's also about your health, right? Because you're going to make sure that you're not putting garbage onto your food and then eating that. It's about that. The food is really about dumbing you down so that you don't pay attention at a clear enough level to make choices that support your best interest. You're making choices that support their best interest. Not okay with me. And Iron Mom asks, my girls probably would have thought I was Iron Mom. But they're 43 now, they're kind of over it. But Iron Mom asks, my question, if I have a credit card debt, is it better to sell my silver to pay it off or to hold it and just accumulate credit card debt? Credit card debt is not a good thing because it's a variable rate. And once that hyperinflation kicks into gear, you will never, ever, 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 ever get out of debt. I mean, do I want you to sell your silver? No, because that doesn't put you in a good position either. Can you pay off your debt though? I mean, I need to know more in order to be able to give you an educated opinion. But you're between a rock and a hard place. If your only choices are to continue to accumulate credit card debt, I can't in any good conscience tell you to do that. But I would tell you to make sure that you create a local community so that if that's the choice that you have to make, because and don't add to it. So many times people will pay off their credit card debt only to grow it again. Don't grow it. If you can get yourself out of credit card, fixed rate debt is fine. There's a whole strategy for that. But that credit card debt, that variable rate debt, what are you paying on those cards now? I mean, I don't know, but isn't it still somewhere like, I don't know, 26, 27% or 30? I don't actually really know because I don't carry credit card debt. So yeah, I'm definitely not a proponent of carrying credit card debt at all. Now, if you can take out a fixed rate loan to pay off that credit card debt, now you're talking about a strategy, because silver too is so severely undervalued. And if all you have is silver, you could pay that debt off, but you got to get out of that variable rate debt. You do. You just have to get away from that variable rate debt because it's going to kill you. It is. And Joshua Keeble asks, what's your projection for silver? Well, I think that, and I could be wrong, and in terms of the fiat, because I'm going to give you two projections. First of all, I can tell you the fundamental value of an ounce of silver. I don't have it. Where's my, oh, here's the ounce. Okay. That the fundamental value of an ounce of silver is somewhere around $2,000. So there you go. Ultimately, that's where it will go. And then higher than that, because the more debt that's grown, the higher the fundamental value is of both gold and silver. Market-wise, we are concluding the cup. So I would expect to see it maybe by the end of this year, somewhere around $50 an ounce would be my guess. I'm going to be right or I'm going to be wrong. I hope you love me no matter what, because I am trying really hard. The old guy. A DIN inversion of short-term rates decreases seems different than long-term increases. Liquidity. Is there a difference? Where are we headed? Well, we are headed to a hyperinflationary depression, and that means that interest rates are at some point going to spike up really high because confidence in the debt is going to decline. And so you're going to see, but you know, really all we're talking about is debt, and the issue is about the debt. And there has been, that's the largest market that there is, and the treasury, the 10-year treasury debt is what underpins the entire global market. And there has been a structural shift in this market. It's not something that I'm waiting for. Now, I trust the formulas far more than I trust my opinion, because they're right more often than I am. So I try and base my opinion on that. So when we're looking at this disinversion, and you go back, and can I show them? Can I go back to that one? Okay, this is the chart that I want you to pay attention to. Okay, here is where the 10-year yield is going above the 2-year yield. Okay, and you can see every time that it ratchets up, then we get this gray bar, the recession. So I think that this is it. You know, and I could be wrong, because maybe they're going to pull something else out of some orifice that will surprise me that I'm not expecting. But I don't think so. There has never been even one little doubt in my mind, but that 2008 was when the system really died. And then they started all of this quantitative easing and all of this money printing that's creating all of this inflation, and we have virtually no purchasing power left in this currency. I wish somebody could tell me what happens when we get to zero purchasing power, because we're probably there already. The official number is 3 cents, but it's like 3.01 cent, and then now we'll go to 2.99 cent. You know, it's like there's no purchasing power left. We are headed into a hyperinflationary depression that I believe has already been done, as witnessed by the spike in the speed at which money changes hands. That's where we're headed. And when we disinflate, disinvert, and we have short-term rates that are lower than longer-term rates, whatever, 10 years, 20 years, 30 years, that is typically the trigger for the clock to start timing, right? So that's why I'm saying, please, I keep showing you all of these warnings. Heed them, heed them, heed them. And if you can't heed them by getting as ready as you'd like to with food, water, energy, security, barterability, wealth preservation, community, and shelter. Community needs to be like right up there with the number one. Local community, so that you can secure your food, your water, your energy, those parts of the mantra. Global community, so that we can have a quiet revolution and force us to have a seat at the table in the new monetary system that has a component of gold, that if I'm there, I'm going to demand and keep demanding and keep arguing to have it be that you can convert it into the gold and take it out of the system. Because frankly, that's the only way that you're going to have control. Because who's to say? I think that's why they're having trouble in Zimbabwe, because you can't convert it and it's all electronic. Oh yeah, do you trust these guys that have just really basically beaten you to a bloody pulp and created the mess that we're in? Whose best interest are they doing any of this in? Not yours or mine, in their best interest. Don't trust them, come together in community. And Michael McKenzie asked, digital carbon credit, I love this. Okay, digital carbon credits, CBDC around the corner. It's in plain sight by 2030, the World Economic Forum, the WEF. Yes, it is, my friends. And it isn't just the WEF. It is the UN, United Nations. It is all of these guys have an agenda of 2030. We're going to feel a whole lot more pain before that. Get yourself protected. Here we are. We're almost in 2025. We don't have much time left. Thank you for bringing that up, Michael. I appreciate it. And low blood pressure. Lynette, you're oh, thank you. I hope my hair is so much more beautiful than Janet Yellen's, because if you said it was the same, I'd probably break down and cry. Thank you. Okay, Deja Vu asks, can you buy bankruptcy insurance? Yes. This, my friends, this is your bankruptcy insurance. Richard Russell, who's been passed for a long time, but I used to read his newsletter all the time. And I thought it was really interesting because he said, if you have 1,000 ounces of gold, you will always be wealthy. You need real sound money. Why do you think the central banks are loading up? Because they know that the system is bankrupt and they want to retain their freedom and retain control. Same reason that you and I are doing this. And Sal T asks, 3,000 ounces of silver and still stacking. You are very welcome, Sal. And by the way, I am going to be doing more things around the country and around the world. And, you know, if I'm coming to your neighborhood, I sure hope that you guys come and meet me in person. And if you're coming to my neighborhood, I sure hope you come and see what we're doing over here and be part of the live audience. I really can't wait to do that. I can't wait to do that. And low blood pressure asks, with lots of question marks, do you believe the Fed is already buying the bonds? Of course they are. Of course they are. All of the central banks are. You want to know where you can look? And I'm not sure that you're ever going to get a full, honest answer, but at least you'll have an idea. Go to the FRED. FRED. That is the Federal Reserve Education Department. And in that search bar, put in there, Treasuries owned by the Fed. And they're going to show you. And what you'll also see if you go out to Max, so they'll go all the way back to the beginning of this grand experiment, is that I believe it started the end of 99 after the euro was created, because the euro was actually created to take over. But what that actually shows you is that the US dollar has been losing its status as the world reserve currency for a very long time. The writing is on the wall, absolutely. And Andrea Van de Kloot asks, my fear is still the confiscation and or making illegal use of our assets, including gold. Mine too, I agree with you. Perhaps we can only sell it for fiat to preferred places that will only pay or less no matter what the value. And that, my friends, is exactly why I only buy it this way, because it's a combination market. It's a different market. It's the market that those in the know use for themselves outside of the system. Because in 1933, when Treasury Secretary Wooden put in place, as we were confiscating the gold from the population, what did he say? Coins that were minted prior to 1933 are classified as rare and unusual. And while if you were in the industry with jewelry or dentistry or other areas that use the gold, there was oversight in there. This was the only way to accumulate it and not have oversight. That's one of the best lessons. And my Uncle Al was great, and he gave me a lot of wonderful lessons. And, you know, maybe he's hearing me, I don't know. But that's what he showed me, because when we went, my parents, for those that are new and for you guys that already know this story, but if you don't know this story, you know, my Uncle Al was a major antique dealer, and he would go into very wealthy homes and he would buy wonderful stuff from them, and they would bring him the gold coins and sell him the gold coins for, I don't know, maybe $35 an ounce, because that was the spot price at that time, the fixed price at that time. And he had, you know, my parents and I were at his house one day, and he said, "Come here, I want to show you something." And he took us in a back bedroom, and he had 2 tall floor safes. And when he opened those doors, you couldn't fit 1 more ounce of gold in there, not 1 more ounce. And he said to us, "If anything should happen to me, Aunt Bertie will be well taken care of for the rest of her life because of what's in these safes." I was 10 at the time. That was 1964. I was 10 at the time. I didn't really understand the significance of this, but I certainly understand it now. My bet was that he had at least 3,000 ounces in there, because I would say probably at least 3 monster boxes, and a monster box holds 500 ounces. So yeah, quite honestly, oops.
Sorry.
Now he's making me dizzy. Nope, below there. Yep.
The Fed is already buying bonds, right?
Of course they are. Of course they are.
This is the
Oh, and I
confiscation.
did that. That's the
Correct,
confiscation. So yeah, that's why I only do that. I learned that from my Uncle Al, and I also learned this. Okay, in anything that's physical, tangible assets, they always go from undervaluation to fair valuation to overvaluation to fair valuation to undervaluation. It's like a constant move, right? So he taught me, he said, first you buy with this, with your heart, right? But then he said, you always get quality, because I don't really use this much, but this is what he told me, and he was right. Good is always good. So even when you're looking at those Pokemon cards, which is not what I recommend for what we're dealing with, but even when you're looking at those Pokemon cards, and even like the Beanie Baby craze and things like that, right? Yeah. Okay. These are trend cycles, but the more rare ones will always hold their value if they have, unless that market completely collapses. The reason why the gold market will not completely collapse is because where do you use the Pokemon? Same area that you use I'll tell you a little story. My mom used to be a very high-end antique doll dealer, and she worked with mostly French and German dolls, and some of these dolls were like $25,000, $40,000, etc. Expensive stuff. Well, my sister Norma used to do the shows with her, because I don't really like doing shows. But if she couldn't make it, then it was my job. So we did this show one time, and she would always take a pretty large booth, and we set out all of these really gorgeous, very high-end, $20,000, $30,000 dolls. And then there were these 2 huge boxes, and she still had maybe 3 or 4 tables to fill. And I said, well, so what's in those boxes? Because I knew we had put out all the good dolls. And she said, well, just go see, open them up. And there were tons. I mean, I don't even know how many Beanie Babies in there. Now, one of my sisters used to own a toy store, so she would get them, the Beanie Babies, at whatever that wholesale price was, and she did not mark up those Beanie Babies more than the normal markup that would have been at a retail store. So I opened these boxes, and there were all these Beanie Babies, and I'm like, what in the world are you doing with this? And she goes, just dump them out on the table, you'll see. Oh my God. Here you've got these really rare, old, fine dolls, and people were spending thousands of dollars on these $6 Beanie Babies.
Oh, yeah.
They were 4 deep at her booth because everybody else marked them up so much higher, and she didn't. She just did whatever the normal markup was. What are those Beanie Babies worth now? They have no value. But those rare dolls, I think they've cut back in value because of their popularity at the moment. And actually, I know some dealers that would know this better than me. And maybe somebody out there is watching and they know it. So I think the market has come down a bit from where it was during that craze. But they still have value because they're fine. And they're actually rare.
Yeah, we were just real quickly on the Beanie Baby thing. My mom collected those for a while, so we were going from shop to shop to find them because they were so
Probably
rare.
Went to my sister's store.
Funny enough, we actually got one with a misprinted tag, and that ended up being the most valuable one that she has. So kind of funny.
So do we know how much that might be now? I have no idea.
Honestly, when there was another YouTuber that did a whole thing because she found her Beanie Babies and tried to sell them online. I think when I saw it, my mom's was worth about $600 or something like that. But you could buy them for $4 in the store at the time.
No, $6.
$6 at the store at the time,
They were
right?
$6. I remember that.
Four, 6, 5.
$5.95.
Yeah, there you go. There you go. And $5, $6 to $600. Hey, it's a pretty good value.
You just made my point.
Yep.
Thank you very much.
Absolutely.
And my wife's idea one, hi Lynette, who would we sell to if needed? Do you think coin shops would close if the price of gold surges? Actually, no. And, if you buy it from a dealer like Zang Enterprises, we're going to be there to buy it back because we have the wholesaler support. But not only that, you've given me an opportunity to talk to you again about, today has turned into a strategy session. Because what you want to do when the gold fever really is at a peak and it is time to convert some of your gold holdings into other income producing assets, you want to work with like us. We have so many different options of where we're going to liquidate your coins. And so it's not just buying it. I mean, frankly, any monkey can sell you gold and silver. That doesn't take rocket science. Although understanding what kind of gold and silver to buy is really important. But there's also the liquidation part of it. So our job at that time is to capture the most that we can for you, which means maybe it's going to go through an auction. Maybe it's going to be married with other coins in a string, creating a collection or a set, which right now does not command a premium, but historically it's commanded up to a 30% premium. Perhaps it'll be better just to sell it back to the wholesaler. These are questions that today I can't answer, but the strategy is set up to look at where are we going to capture the most for the client. So if you're buying stuff from a mom and pop shop, you're definitely not going to get that because they don't have the access that we have. And if you're buying from another dealer, you're going to want to find out from them how they're going to liquidate it. You don't tell them, see what they say. I'm telling you that part of the strategy that we execute is your exit strategy. And the other thing is if you do buy it from a dealer, you're probably you want to find out what their buyback policy is, because that can vary widely, and they generally don't want you to know it. But we're very upfront with it because you need to know everything. Imagine that. We actually believe in educated choices. Wow. And Elmo Irby asks, so are you saying only stack numismatic gold? No, that is not what I'm saying. I am saying establish your goals and what you're trying to accomplish, and then allow that to dictate what you stack. And Mud Hunter asks, sorry I came in late. Lynette, what are your thoughts on the dip of gold and silver lately? Buy, buy, buy. But in the areas that are more bullion-like the raw stuff, okay, that is going to fluctuate with the spot price. When you get up to, because it straddles two markets, right? It straddles Wall Street's market as well as availability market. But when you're doing the collectibles, that is a physical only market. And so those are not going down because demand is going up. So although they're still below the 2008 high. And Jane Pizza Dough, when things go crazy and metals shoot up to 10,000 plus, is there just a short window to convert to the current currency? Looking back at charts, prices shot way up for like a minute, then way back down. Now, I think what you might be referring to, and I don't know that I have this easy to get, but all right. So when they do that overnight currency conversion, what they're really doing is devaluing the currency, maybe like 96%, almost 100%. So gold and silver shoot up, and then, I can't tell you how long that's going to happen because everything resets, but usually, on average, there's typically about a 9-month window. Having said that, I want you to know that, and there'll be multiple, more than likely, there will be multiple overnight resets that happen. On average, about 3, but Zimbabwe's on the 6th one, Venezuela's on the 6th one. So I don't know, we're going to have to find out. Then what'll happen is you'll see the gold in terms of that currency drop, and then it'll climb higher and faster than anything else. So yes, when they do that overnight revaluation, everything revalues. But with the very first one, and I will do it quickly, that's when I will be liquidating enough. This isn't the quality that I would liquidate, but enough of the collectible coins to pay off my mortgage. Because why risk it? It's not worth it. And you aren't going to want to convert everything into there, because let me tell you, if you go to sleep at night and you've got $10,000 in the bank and you wake up in the morning and there's one, you really want to convert it into it? No, you're not going to want to. The only reason that you're going to want to is to pay off a mortgage or to convert into an income producing asset or something else that is severely undervalued. You've identified its fundamental value, and so you're growing your wealth base. If you're watching this channel, I'm going to show you exactly what I'm doing for myself. And that's how you really execute. And that's part of it. It's like I said, the strategy is built on layers, and it depends on where we are in the strategy that would determine what you're going to do. Let's see. So you believe confiscation will only apply to bullion? Yes, I do. And the reason is, there are a few reasons. Number one, a raw pre-33 coin and a brand new gold eagle is the same content weight of gold and runs the same way against spot, straddling both worlds. But I can't hold that pre-33 coin in because the IRS has it in a different area as a quote unquote collectible. That's exactly where I want to be. So an easy way to determine what is it that I want to own, look and see what you can hold in an IRA. If you can hold it, and I'm referring to gold in here because silver I'm not as concerned about, but if you can hold it in an IRA, I'm not buying it. I don't want it. I want the kind of metal, and this is why I think it's only bullion. Because eminent domain laws tell us that the government can take anything they want, and they would have to pay you fair value. Well, they manipulate the spot market, so just like they did in 33 when they confiscated the gold at $20, $20.67 from the public, when they got all the gold that they could, that's what they revalued to $35, and people lost so much purchasing power. Today, yeah, it's in a different classification. And like this coin's value is different than this coin's value. So it's not an easy sweep like it is with bullion. And let me tell you, anybody that paid $15 million for 1 ounce of gold, this is not a $15 million coin, by the way, but it's the same category as the $15 million coin. And anybody that can do that is either those that write the laws like Treasury Secretary Wooden, or those that have the ability to influence those that write the laws. So it would just, these coins make up less than 2% of the total gold market. It's too hard to confiscate them because they'd have to look and value every single coin. Not worth it. It's such a small amount of gold. So that's, for me, that is a big reason why I only do the collectible gold. And even though this is raw, it's still pre-33, right? And it says it in the confiscation. Any coins minted prior to 33 are classified as rare and unusual. So that's how they got away with accumulating, and by them, I mean the Treasury Secretary and all of his friends that understood what he was doing. That's how they got had the ability to accumulate all of that raw gold without any oversight, and how my uncle was able to accumulate it. And then, I don't know, he never slabbed it to my knowledge. He never put it in a slab, but that's how he was able to accumulate it and hold at least 3,000 ounces of gold. That, let me point this out, that was legal for him to hold, and therefore could actually use it in the normal marketplace and build out his strategy. We have any more questions?
Yes, we do, sorry.
Oh, okay.
Here we go,
And
went alone.
wait, okay, when alone. Ma'am, what is the maybe you meant average price of a house in the USA to buy, assuming I will find it, to buy in current markets to retire
Maybe
successfully?
appropriate price of a house?
Yeah, I'm not really. Okay, so let me just kind of address this in a little bit different way, because this just came up for somebody else. Now, if you were looking for speculation, I would tell you stay away. But you got to have a place to live, and you got to have a place to make your last stand. So the strategy is to, and I can't tell you what the price is because I don't know, are you paying cash for it? You're going to have a mortgage. I would have a mortgage on it. In fact, that's the only reason I do have a mortgage on this house, is because I want to actually execute this strategy. But all of that debt that you would take on for a mortgage, and you need to be able to live comfortably and afford it, so I'm not telling you to take on a big house. But let's say that the price of the house right now was, to make life easy, $500,000, okay? And you took out a mortgage for $400,000. Well, we can help calculate out how much of this you need so that when they do that overnight reset, you, boom, pay that mortgage off with dollars that have virtually no value. So I'm not really sure exactly what you're asking, and if you can let Adam know if that's not it, then I will try and answer it, because it's not the price of a house as much. You're going to repay that mortgage if you're executing our strategy. You're going to repay that mortgage with dollars that have no value whatsoever. Meh, who cares? I don't care. But you'll still have the house, because that's not going to evaporate.
Right, yeah, the house isn't going anywhere.
Right.
Mud Hunter asked a question earlier and saying, sorry I came in late, Lynette, what are your thoughts on the dip of gold and silver lately? And then he asked a follow-up question, which was, my question really was, why do you think there was a drop?
Oh, well, because of the volatility in the markets. That's really why. And the other reason could be, but I haven't really looked at this, ahead of any crisis or into any crisis, they want you to stay away from gold. So they could, and it's easy to manipulate the price, but usually that's why, and it's not real anyway, and it's undervalued anyway. So bye.
I hope that helps, boss.
Thank you. And Leslie Fraze asks, in anticipation of a crash, I've kept all of my husband's 401k in cash/mutual funds with Fidelity. Good or bad? Look, I don't work in that arena anymore, so you might want to call and talk to one of our strategy specialists. But when I did, at that time, I found that it took 3 months to get any money out of Fidelity. So I think if you want to test it, maybe take a little bit of a distribution. If he's still working there, you might not be able to withdraw it. So there's more information that I would need before I could actually give you an accurate answer. If he is still contributing, then you're probably not going to have, well, you would not have full access to the money. What you might be able to do, it's called an in-service withdrawal roll-over election. I'll repeat that. In-service withdrawal roll-over election. You have to call the administrator, and if you have the ability to do that, typically it's $50,000 or up to 50% of what's in your 401k, whichever is lower. And then you can transfer however much of that into a traditional or Roth IRA. Well, don't do Roth. Don't do Roth. Do a traditional one, because then you can take the distribution there. You can pay your taxes if there's penalties, whatever. And part of the strategy will show you how to recoup those costs. So that, or you might have the ability to borrow against it, and then you pay yourself back. So it really depends on whether or not he's still working at the company, whether or not he would have access to it. And Deja Vu asks, is selling bullion subject to capital gains over $10,000? Well, I'm going to tell you that every good citizen always pays all taxes that are due. I am not a tax accountant, so I can't really answer that question, but you would be required, and I don't think it's over $10,000, you'd probably be required to pay capital gains, but depending upon what you're holding, the difference is that we are not legally obligated at this time to report any part of the transaction to anybody, not on the buy side or on the sell side, but that's not true with all gold. Because like I said, there's gold and then there's gold. So you can call us at 833-GLD-ZANG, have that conversation with one of our strategy specialists, and also, a tax accountant. And Jules F. asks, Lynette, could you please explain why they are buying the debt? I do not understand why they buy debt. FYI, you rockin' always. Oh, thank you so much. Thank you. I really appreciate that. Okay, the reason why they are buying the debt is because the whole financial system since 1971 has been built on the debt. So when debt is created, whether you go into the bank and you borrow, so that's why they keep saying, well, we want the bank strong so people can go in and borrow. So money, the fiat money, the government debt-based money is borrowed into existence. If there are not enough buyers of the debt, well, then the central bank has to go in and buy the debt because there's not enough people outside of that. And that's been true since the Federal Reserve, which they didn't publish, which they didn't want you to know about, because that's what third world countries do, buy back the debt that the government issues and monetize government spending. But they've been doing it since either the end of 99 or the end of 2000. I can't remember off the top of my head. So that's why, because they're trying to support the debt regime, and if there aren't enough others to buy it, they buy it themselves just to keep this game going. But the more debt that's created, the less purchasing power all of this debt money has out there. And Kirk Adams asks, you look like you're in your 50s, not born in the 50s. Oh, thank you so much. That's nice to hear since my birthday's about a month away. But thanks for sharing wisdom. Great show like always. My pleasure. It truly is my pleasure to be of service. And that's why I love going out and meeting face to face, and why I'm so anxious to be doing this with a live audience. Because I do see you, and I know that we're having this conversation, and you're able to ask me questions, but it's even better when I can actually see your face. So I don't know, is there some way that we could even make that happen, like in a Zoom or something?
I promise you we're going to work on it because we're going to start with taking calls, right? Taking calls at least, so you can at least hear their voice, right? And we can have a live call. Great. We'll work on that first, and then we'll get to the video. And then eventually we'll be doing live shows where you can show up and watch us live and take part in the audience.
Yep, we're getting there. We're getting there. And Fallout Funds, Mrs. Zang, well, that's my mom, but you could call me Ms. What are your thoughts on fractional gold? I love fractional gold. The function of fractional gold is for, say, things like property taxes or maybe medical issues or things like that. So I love fractional gold. I do. And I'll even add this, because I know that not everybody likes the collectibles or believes in them and blah, blah, blah. If I absolutely had to buy bullion, then I would do 10th ounces. Why? Because if you go in someplace with 1/10 of an ounce, it's just not going to be as obvious as a full ounce. But I personally, I don't have bullion, because I want to be able to use it in the normal marketplace. I want to execute the strategy that I created based on my studies from 1986 on currencies and currency life cycles. So this is really why I just do the collectibles.
I have a follow-up question on that one with the fractional gold.
Yep.
Do you believe it's worth understanding that the premiums on the fractional stuff may be a little bit higher than the premiums on the full ounce? Do you think it's worth, and give me your opinion on this, is it worth saving your money to buy the full ounce, or is it worth just buying the fractional gold along the way because that's what you can afford?
It is worth establishing your goals. I'm surprised you asked me that question, since I've answered it like 5 times today. But it is worth establishing your goals and what you are trying to accomplish. So if you've got property taxes, don't buy full ounces for that particular function. I like the foreign gold fractional coins, or even these are the US fractional coins, and it's based upon what your current property taxes are, and then we can extrapolate that out to determine how much you need. So it never is, oh, the premium. Personally, I don't give a crap about the premium. And that's because it is so severely undervalued that I can buy a collectible coin way under its true value, and that eats up all that premium, right? It's not how much something costs, it's the ROI, the return on investment. That's what really matters, and that's what you should be looking at. Anything else, I don't want to offend anybody, but it's a little short-sighted. You really need to put your goals first. Put that first. Then you also need to really understand the true value of this stuff, which, look on the Fred's chart on purchasing power. It's a big fat goose egg, just like every other government debt-based currency has ever been. Zero. So if you have stocks that are making new highs, is that the real value? No, it's because they flooded the system with new money and destroyed the purchasing power. And then people try to escape the inflation by buying stocks or buying bullion. I don't want to pay the premium on those collectibles. I just want the bullion. Just give me gold. Well, I mean, are you really willing to risk your wealth? Because I'm not. I'm fighting for us to keep our wealth. And I don't believe in working on hopium. My nickname is Data Gal. Give me the data, and give me the data that they absolutely won't. I'll change my mind. Give me the data on the cryptocurrencies. I'll change my mind. But until you can actually prove to me with hard data, why would I change my mind when I've got lots and lots of history to tell me what the most likely next outcome is going to be? And I know it is so cheap, I don't care. I do care about keeping it. Joy Bay asks, what about holdbacks? Any use there? They're cool to look at, but is holding any useful? Oh, I think you mean gold backs. Okay, I'm like, hold backs.
Sorry, I didn't fix that, sorry.
That's okay. I know what you're talking about, Joy. They are gorgeous to look at. They are embedded with even a thousandth of an ounce of gold. And so I can see that in this layered strategy. I can definitely see that for a small portion of your portfolio. I know that they're working on acceptance, so if you can use them in different stores and what have you. So the answer is yes, I can see a place for them. I wouldn't do a tremendous amount, but yes, I can see a place for them in the strategy.
Kind of another question real quickly. Would you buy a gold back or would you buy fractional gold?
Well, the gold back, I don't have a fractional gold coin that can go to a thousandth of an ounce. So that's why I said I can see it. So again, I'm going back to function. What am I trying to accomplish? And I allow that to guide what I do.
And it looks like Sam is the last question for today. Sam Stearns.
Okay. And Sam Stearns asks, Lynette, what do you mean by having a seat at the table when it comes to developing a new currency? And how, you took the question away from me. Thank you. And how will owning gold and silver give us the ability to influence that process? Okay, so exactly what I mean. If enough of us, I'm thinking even 3% globally of people that own physical gold and silver in their possession, if we have even 3% of very vocal people that own physical gold and silver, then that means having a seat at the table means that we are sitting down and discussing and helping determine what this new, let's say it's a CBDC, for example, because that's what they want to cram down our throats. Let's say they're coming out with a CBDC. Even the IMF have talked about a component of gold being part of it. Okay? But I want to be there to say, and that CBDC must be convertible by the public, must be convertible. So I want us to have a voice. And if we have enough people that own physical gold and silver, they're going to have to give us a voice because we truly are outside of the system and invisible. So that's what I mean. I want to help determine what that new monetary system looks like. And if I'm sitting at that table on your behalf, then I'm going to sit there and demand that it is convertible. Because if it's not convertible, can you guarantee what they have? We haven't audited the Fed. We haven't looked at how much gold is sitting in Fort Knox or anywhere else. We don't need to know that information. Well, guess what? We need to know that information because do you trust these politicians? I mean, seriously, do you trust them? Any of them? Do they show you that they have your best interest at heart? Because I don't. I don't, period. Because I've studied enough history and studied enough of the laws and seen that the next one doesn't matter. Republican, Democrat, doesn't matter. That they're pushing an agenda forward and they're legalizing things that remove our freedoms and give them more power. So that's what I mean by having a seat at the table and holding it in your hands. If enough of us own physical gold and silver, we have power. And they know we have power. And they can't say jump and us say how high. If everything's in fiat and they got that button, what'd the Federal Reserve say? What'd the central bank say? If you give us these CBDCs, we will guarantee that there will not be any more inflation. That's how they're going to sell it right after the hyperinflation. And we can have our finger on the economic button 24/7. Do you want them to have that level of control? I don't. This can thwart them. And Morgan Stevens asks, Lynette, please tell me if I should keep my gold IRA or get my gold in my physical hands. You do whatever you're comfortable with, but get it in your hands. Because if you don't hold it, you don't own it. So I will.
Last question.
Oh.
Last question. Sorry, Steve.
Okay, Steve Ringer. Did we ever get it from that one person that keeps trying to do it?
No,
Wow. Okay. If we have your email, though, we'll make sure that we get it up here. And Steve Ringer asked, earlier question, where is the gold coming from that the central banks are buying? They're coming from, that's a great question. They're either being mined, so like in China is a great example. All of the gold that's mined in China, not even 1 ounce leaves the country. They don't leave the country. So it can be internal mining. It can also be like in South Africa, where miners are forced to give them a certain percentage of all of the gold for the local currency that they're mining. It's also going out into the marketplace. And let's say that they buy an option to buy a certain level, 500 ounces of gold or whatever. If you go in the CME, the Chicago Mercantile Exchange, they have a special central bank program. So when you buy an option, you have a right to buy a certain level of gold at a certain price at a certain time or within a certain time frame. So those are the different ways that they accumulate and buy gold. So it's a number of different ways, but that's how they do it.
Okay, one more question. I just saw it. Jennifer, I'm sorry. I tried to get this earlier, but I missed it. Jennifer asks, Lynette, we don't have old collectibles in Australia, so what equivalent should we buy?
You know, I'm going to be in Australia with Good as Gold Australia on November 30th. There, I think if you don't have any old coins, then you're not going to have as many options, obviously, and you'll have to do bullion. You will. And you can give a call to my good friends at Good as Gold Australia, because we're going to try and figure out some kind of synergistic relationship. And of course, I love them anyway.
Absolutely. And make sure you guys are subscribed, because we'll be posting a lot of content from that event, as well as what's coming up next week. So
Yeah,
make sure to go
from
check out our
Peak Prosperity.
Instagram. If you're not on our Instagram,
Yep.
go check that out, because we'll have a lot of stories and a lot of content.
Yep. I'm really excited to do this and see Chris and see all the people that are there. It's going to be a fabulous event. I'm very excited, very excited. And I put together a whole presentation. It's going to be fun. It's going to be fun. So, without further ado, if you like this, if you managed to get through this whole thing, give us a like, leave us a comment, share. This is probably too long a video to share, but if there are pieces or parts, call us. We'll send you the slides. We'll give you the links. We'll give you whatever you need. And until next we meet, I love this community. I really do. Help us grow this live network, because the more we can do that, the more we can connect, and I think the better off we're all going to be. And so, until next we meet, please be safe out there. Bye-bye.